Hi guys, welcome to another episode of today's trade of the day. And for today's trade of the day, the pair that we'll be looking at will be the pound yen. Right? The reason why we chose this is because later on in the evening, there's going to be some uh, some member of parliament who will be speaking, and I think they're going to be looking at the economy and debating also about the coronavirus breakout over in the UK. So it is definitely something to look out for. Also, later on, we also have the Bank of England credit condition survey coming out. So I thought this would be a good pair to look at. The pound against the backdrop of the yen, which is a well-known safe haven. So with that, what I like to do is to approach the analysis. When doing technical analysis, I like to use the top-down approach. That means starting from the monthly, we work our way down to the weekly, to the daily, and possibly even the 4-hour or 1 hour. And on each time frame, we actually look for resistance and support levels. With that, let's look at the monthly. Well, on the pound yen monthly chart, what we want to do is we want to focus on the more recent prices. Now, in technical analysis, it's important to know everything that happened in the past. However, it is the current prices that will determine whether prices move up or down next, right? With that, so graphically speaking, we can see some sort of graphical support level here, long-term support level, where price actually tested once, twice, came close a third time, and it seems like price is going to make another push down one more time at this 118.83 level. Okay, so we can call this our long-term support. Now we see that price made sort of a push down, held at this level, and then a small bounce, and it came back down and held at this level. Now, we just want to see whether price can actually go even lower, or is there a strong Fibonacci level that finds confluence with this long-term support, right? So let's use the Fibonacci extension tool. First point to the second point, and to this third point here. And then I'll open up all Fibonacci ratios. And we see that the 0.5 level falls just nice in line with the long-term support. So let me just highlight that. So we have our long-term support. What we want to do now is to look for our long-term graphical resistance. And of course, the recent swing high, the most recent swing high will be a good indicator at this 156.61 level. Right, so let's just call this our long-term resistance. Now we have this, we see that price actually made sort of a bounce, and we want to see how far price can actually retrace up. So we take a retracement tool from the swing high to the swing low, open up all Fibonacci ratios, and we see that this long-term resistance is actually quite close to the 50% retracement level. So once again, let's highlight this 50% retracement level. There's a bit of a space, so it's most likely a resistance zone. But now that we have our long-term resistance, long-term support, let's go down to the weekly. So let me just tidy this up so it's easier to see for all of you. Okay. Again, we want to focus on the more recent prices, right? This area here. And we note that price has actually been in sort of a downwards trend. How I can confirm this is that price has been making lower highs, right? You see lower highs, okay? So with these lower highs, we can be sure that price is in a downwards trend. And what we want to do here is we want to find our weekly resistance and weekly support. Graphically speaking, there's sort of a resistance level over here. Okay, there's a graphical resistance quite close to this level here and this level here. Let me just call this resistance, weekly resistance. And we confirm by using Fibonacci retracement of this entire move to the spike here. We open up all ratios. And we see that this weekly resistance falls just nice in line with the 61.8. So this is a 61.8 is always a key Fibonacci ratio, so we'll highlight it. And we want to look for support graphically. It's quite obvious that we have a graphical support here, right? Where price tested, rejected above, and tested one more time, rejected above, and now tested the third time and it rejected above. So could be that price is actually making a push up towards the weekly resistance while holding in a downward trend. So this could just be a retracement, after which we have a a deeper drop. Okay, so with this strong graphical level, we can call this our weekly support. Okay. With that, let's go down to the daily. Once again, let me tidy this up. We can remove the long-term resistance, long-term support because they are too far away. It's more than 3 or 4% away. And when you're talking about Forex, right? When you're talking about Forex, 3 or 4% is already a very huge move. So this is, to the long-term resistance, is 14%. To a long-term support, it's about an 11% drop. So this is something that we can just do away with for now. And just focus on the more current prices. So we have our weekly support, we have our weekly resistance. And we want to focus on the more recent areas. Now, we see that price actually made a sharp push down before a bounce. So on the daily right now, we want to find a daily resistance and a daily support. Graphically speaking, we can see that price actually held at this level quite strongly. Price was actually moving sideways in this level, holding above this 138.87 level. And when price broke below, it came back up to test this area once more. So this can be a strong support, graphical support, turn graphical resistance. So let's just put this as our daily resistance. We don't just draw a line according to graphical. What we want to do is we also want to confirm this with Fibonacci levels. So we see that price actually made this push down as mentioned earlier, and we want to see how far price can actually come back up. So we shall take a retracement from the swing high here to the swing low. Open up all Fibonacci ratios. Now, there is no close levels where the Fibonacci level doesn't fall closely with this daily resistance that we have identified. So it can clearly be a resistance zone. One thing to note is that if I were to zoom in, we see that there's sort of this gap area here where the 61.8 is, right? Price over here, and then it gapped down and came back up to test this level. So there's sort of a gap on the daily. So we want to point out this zone as well. So I'll just draw a box for myself that there is a strong zone here, a strong resistance zone to the 61.8 level. Right, so we have a daily resistance zone here that price could possibly push up into anywhere in this area, right? So now we want to find a daily support. Let's highlight this 61.8. We want to find our daily support. So we see that price actually rebounded, right? Price actually pushed up here. We want to see how far price can go back down should there be a pullback. So same thing, we take a retracement from the swing low to where price currently is, and then we open up all Fibonacci ratios. Now, graphically speaking, there are no nice, the Fibonacci levels do not line up with any graphical level. Like there's a graphical support here, but it's away from the 23.6%. There is 61.8, the key Fibonacci ratio, which is closer to the candlestick, but only these two candlesticks held above the 62%, right? So I'm more inclined to stick with the key Fibonacci ratio. So I'll just highlight the 61.8 and I'll call this our daily support. All right, we choose the important Fibonacci ratio levels. One thing to note also is when I open up this Fibonacci level and I were to do a 0.272, one of the Fibonacci retracements, you see that it actually falls in line with our daily resistance, right? So this resistance, this daily resistance is most definitely a zone. And long term, we are bearish. the current view that I have is that price could make a last push up anywhere inside this resistance zone before making a drop down towards the daily support. So that's the view that I have. And on the 4 hour, let's go down to the 4 hour to look for a nice trade setup. Let me tidy up this chart for you. Okay, long-term 61.8. This is zone. All right. So we have our daily support. We have our weekly support. Okay. So this is the 4 hour chart that we're looking at. Interesting to note is that price made a strong push up, right? And then after it sort of made a sideways movement and then a slow drift up, and now it's a sideways movement. This seems like the bullish momentum is dying, and it could just make another slow drift upwards towards the daily resistance that we highlighted before a drop down towards the daily support. Okay, so what I want to do is, you see that there's sort of a one push up before a sideways move to here. And then we want to see how far price can push up. So we look for our 4 hour resistance. I'll use a Fibonacci extension from the swing low to the top and down below here. Open up all ratios. And we see that the 61 extension falls in line with our daily resistance. So that's another key level right there, right? So let me just highlight the 61. And there's no real strong resistance before that. What I'll do is I'll just take because there's no strong resistance before the daily resistance, what I can do is, using this spike here, this can be my sell entry. It is a possible sell entry. So because I'm not sure whether price would really push into a daily resistance, or price may actually just push to tap this level here, this 61 level, right? So why not just enter, sell at the high, and then with my take profit down at the daily support. So my daily support will also be my take profit. Okay. This daily resistance here will be my stop loss. The reason why the daily resistance is the stop loss is because this daily resistance that I found multiple times and multiple Fibonacci ratio, should price actually go above and close above the daily resistance, this would mean that my bearish bias is wrong and price would actually make a further push up towards the weekly resistance. All right, so for now, the trade of the day for pound yen, the idea that we have is we sell at 135.75 and our first take profit is at 128.41. Once price comes to here, I'll close out 50% of my position, move my stop loss to break even, and then I will let the rest of my positions right down to the weekly support at 126.125. Should price go above my 138.874, I would immediately tell myself that this bearish idea is invalidated and it's time to go to the long side, to play a long towards the weekly resistance. So that's all we have for today. Thanks a lot for your time. Stay safe, and I'll catch you guys the next time.